Good morning, everybody. Hey, welcome to Thursday. It is May 5th. Happy Cinco de Mayo Day. And I know I've been gone for a little while, but I've been getting some education for a couple of days and spent a little bit of downtime out in the big city of Las Vegas. But it is so glad to be back on the East Coast time zone and looking forward to the next couple of days with you guys before I take off again for a little bit of IRA training the end of next week. So glad you're here. We'll talk about what's been happening and more when Dave joins us here in just a few minutes. Before we do that, though, let's just walk through our core retirement design that helps you design the retirement you always dreamed of. It's important that you do that, that you know how much risk you have, that you adjust your risk, especially the closer you get to retirement. And if you don't know what those numbers look like for you and your retirement accounts, give us a call at 863-382-0037. And let's walk through our core retirement design. With that, we got Dave coming up next.
5.0. That's REM there. I'm Morning Dave. We're at 8:41 here, 19 before 9, and he is back. We're going to check in on your money and see what Wall Street's doing to you today. And Phillip Statler from Statler Financial Services is back on the phone with us. Phillip, it's so doggone good to have you back. My life gets easier when you're here.
Hey, man, it is glad to be back because, man, you know, when you go West Coast to East Coast, it can drag on you a little bit. So by the end of the day, I'm sure I will be dragging. But, hey, had a good conference out there in Vegas and actually was off the strip, which was nice. Didn't have to deal with some of that hustle and bustle downtown. And then got a couple of days of downtime. So really good time there learning. Before I go next week, Thursday and Friday, to learn more about IRAs next week. So, yeah.
Okay. Yeah, it helps to remind people that, you know, no matter how good you are, continuing education is important in every line of work. And you do this a few times a year just to keep completely up to date. And new ideas and new information abound in every line of work, especially yours, right?
Absolutely. I mean, you know, look, in this business, if all you do is go to industry conferences, then all you get is inundated with the industry news. And that's not what it's all about. It's about taking care of your clients and doing what's best for them. And a lot of times you got to get away from the industry to learn about different things that affect them. That's why I spend usually 4 days twice a year, or two days twice a year with Ed Slott, just learn about IRAs and that type of thing. And then this last conference was about leadership. So we're always doing different things to stay up and current to find out how we can take care of our clients best.
It was. I'm glad to have you back, and I'm glad to have a continuing high level of expertise as far as my partner in this effort every day. Backing up to yesterday, 2:00, the Federal Reserve came out with their decision to bump the reference interest rate up by 0.5 point. The market at 2:00 just kind of went, okay. Then Jay Powell took his press conference at 2:30. And we went up 932 points on the Dow, 125 points up in the S&P, 401 points on the NASDAQ. The NASDAQ was a full 3% increase in one day. And sitting for moi, looking at the charts and listening to what I was getting as far as Powell's press conference, I was saying, wait a minute. He just raised the interest rate by 0.5%. That I figured was baked in. But during the press conference, he said, yeah, we're going to probably raise it 0.5% next month and 0.5% again the month after that. And, I mean, granted, our interest rates will still be relatively low compared to history, but that would be more than tripling the interest rate the Federal Reserve charges banks at the counter. And I was kind of surprised to see the market go crazy up on that. But you're saying that you think the market was actually baking in worse than that, huh?
Well, they were. So I listened actually on the plane yesterday coming home. I listened to his whole press conference, and then I obviously the commentary afterwards. So here's the deal: is they're basically Powell saying that the next two meetings that they're going to probably raise interest rates 0.5 point, but no more than 0.5 point next meeting and 0.5 point the next meeting. So that's going to be 1 full percentage points in the next 4 months.
Which basically boils down to tripling the reference interest rate inside of 5 months. And I guess that's the part that surprised me looking at that. But, you know, And because, it obviously with the debt-driven stocks, especially like the ones on the NASDAQ exchange, that's certainly not good news for them. But you're basically saying they were relieved it wasn't going to be 0.75% and certainty helps, huh?
Exactly. And so, because that was the thing, is that there was the fear that, hey, and then not this meeting, but the next meeting, we could see a 0.75% to a 1% increase. And so by him coming down and saying, look, folks, next meeting, pretty much a half a point, and the meeting after that, a half a point. Then they have August off. And then the rest of the time, they're not sure. A lot of the commentary I listened to was, hey, look, then you can probably figure another rate increase after the August meeting of 0.25%, and then let that settle for a little while to see how things are doing on the inflation front.
Okay, so it was more relief than it was happy with the increases.
Exactly. Yep. So it brought certainty. And, the one thing you and I talk about in the markets is the market wants some certainty, good or bad. As long as it knows, then it can deal with it. And that's what Powell did yesterday.
Actually, that does make some sense. Something you and I have both preached for eons is there's always a way to make money. And every time one class of stock gets whacked, another class ends up going up. What's going to happen? Then you can act accordingly, and that partially explains some of the big increase yesterday in the process. It's actually, from my personal standpoint, I'm looking at it and saying, okay, fine. If we do 2.5%, if we get the interest rates up to 1.75 or so, it'll give us a little bit of headroom in case the Federal Reserve needs to do something on the downward level if we hit a recession next year, like so many of the analysts are saying. And at a 0.5% reference rate, we had absolutely nothing else that we could do, basically, to stimulate things that we do hit a bump in the road.
Oh, that's true. And let's talk about one other point that Powell made is that they are reversing. And we talked about this earlier in the month, is that, they are basically going to start selling $95 billion worth of what they own on their balance sheet into the market. So, and it looked like this. I think the breakdown was about 30 billion this month, June 1st, of treasuries, and about 65 billion of mortgage-backed securities. And they'll do that for the next couple months and then rearrange that based on what the inventory looks like.
And that almost certainly, when you dump that many mortgage-backed securities on the market at once, is going to end up adding a little additional impetus to raising mortgage rates.
Well, that's right. And so, we're going to see mortgage rates actually be based on yesterday's numbers and probably increase by at least 0.5%, if not 1%.
Absolutely. What was it? 5.5% was the prevailing 30-year mortgage rate the day before yesterday, something like that, wasn't it?
I think it was.
That sounds familiar to me. So yeah, we're on the way up. So if you're thinking about selling your house, maybe start today or something. The market's going to change rather quickly over the next few weeks. Macro stuff coming out of the federal government this morning. I really don't have any good news to talk about. First-time jobless claims, the usual Thursday number. Yes, it was up. Yes, it missed the street. The street expected 182,000. We got 200,000. I'm brushing that off because we're still in that inordinately low level. But two other numbers that come out: unit labor costs annualized in the first quarter up 11.6%. Now, if you're a wage earner, that's good news. But if you're looking at the inflation rate, you're kind of looking at that and going, right?
Yeah, especially when you look at the quarter before, it was only 1%. The expectation was 10.5, and they come in at 11.6. I mean, that's a pretty big increase in labor costs.
It kind of also means that the job market is tight enough where folks are bidding their way up in order to get employees in, and you and I can both experience that. The other number that kind of hits and hits where it hurts is productivity. Worker productivity last quarter down annualized 7.5% down. Market was only expecting like 5, so that's another big miss.
It is, and that's compared to the quarter before, up 6.3%. Now, let's face it, Dave, if I'm paying more and getting less, that's just not good for the economy totally going that way. And that's what those numbers are telling us.
Absolutely. And really, when you think about it, per unit output, then when you put productivity and unit labor costs together, the cost of getting a widget out kind of is up by like 15% annualized when you put the two numbers together.
Exactly. And I want to make one more point that I heard Powell make yesterday, Dave, is that talking about recession, because everybody wanted to know, when are we going to go into a recession? Do we have a recession? And his opinion was that it'll be tough for us to go into a recession because we have over 10 million job openings and we don't have enough people to fill them. So basically, we could lay off half the people and they could still go find a job. And so you've got to have unemployment increasing in order to really move into a recession. And so
That's
he
kind
thinks there's enough there to pick up the slack if that happens.
That's kind of the replay of what conversation you and I had a couple of weeks ago that, if the recession is going to happen, there are building blocks to a recession. One of them are the economic elements like inflation, like bond rates, like other things. But the other building blocks also include glitches in the employment market. And right now, with such a hot employment market, even if all the other ingredients to a recession are there, the employment market is probably going to carry us farther than we've got a right to expect simply because we've got so much headroom there.
That's right. And obviously that could change in a heartbeat. But right now, there are so many job openings and not enough people to cover them that we could lay off a good part of our labor force so they can still go find a job.
Ooh, that's kind of a clinical way of putting it. It's a painless thought. It's a painless thought. Your point is taken. Statistically, we've got more job openings than we have job seekers, and that means there's a lot of headroom for employers to be able to do what they need to do in order to cope with an economic downturn. Talking about economics on a micro basis, it is still earnings season, and you found out how one of our neighbors up in Orlando is doing at SeaWorld, huh?
We did. So SeaWorld came out and they had a smaller than expected quarterly loss. They saw revenue exceed expectations. And I like this number. They didn't give us the exact number. They said attendance topped pre-pandemic levels.
Ooh.
So that's some good news for SeaWorld.
How come they won't say that if their attendance is up?
Well, probably because they're having to pay more for people to work.
Yeah.
So earlier this morning, they were up 1%. They've given most of that back. They're actually down 0.1% right now, but some good news for them moving forward on that front. Hey, we do have a couple of travel stocks we want to talk about. The first one is Spirit Airline. Spirit lost $1.60 a share, a lot bigger than the 58 cents they were expected to lose. And revenue was below forecast as well. So Spirit's getting beat up this morning, down about 0.4%. The other travel stock we have, though, is Booking Holdings, which is they're that travel company that's out there. They hotels, Priceline, they're that company. And so they had better than expected profit and revenue. They've seen a big jump in demand for travel services, and I can attest to that. Just telling you, the airports were slap full. There's a lot of people traveling right now. It's crazy out there. But they made a $3.90 a share, well above the 90 cents they were expected to make. And so they're having a pretty good quarter. They're up 9.8%, Dave.
Cool. Pent up demand in the travel business at the moment.
Definitely pent up demand. We've got some bad news across a couple brands here. Let's look at Wayfair. They're not so good for Wayfair right now. They lost $1.96 a share. That was 40 cents more than expected. Revenue was basically in line with what everybody expected. And here's the big downturn for them. Customer numbers were down 23.4% compared to a year ago. Ouch. So yeah, that's a big number. They're down almost 12% this morning.
And if I remember correctly, they had a rough quarter last quarter too, because we were kind of thinking during the fourth quarter things would be good for them, and I think they were a disappointment last quarter too.
Yeah, I think so. Then we had another big disappointment. We had Etsy. Etsy was that you can buy stuff that you make right there. But they had a rough quarter. Their earnings came in as expected, better than expected revenue. So when we first look at it, we wondered what was happening. But here's the deal. It's always guidance, right, Dave? Always
Uh,
guidance.
oh,
So the guidance was weaker than expected because here's the deal, and we haven't talked about this much. We talk about the inflation side, but we don't talk about the drop in disposable income. And that's Etsy expects a drop in disposable income, which it takes disposable income for people to go buy stuff on Etsy. So
they are kind of by definition elective purchase.
yeah, exactly. And so they're down over 12.5% this morning.
Whoa.
Yeah,
That's what they get for talking economics in a quarterly report, right?
I guess so. Hey, I'll leave you with this one. eBay. eBay also weaker than expected revenue. They beat it with profit, but again, inflation, buying habits are changing because people are back to going shopping. eBay is down 7.1% this morning.
I'm getting the sneaking hunch, just looking at all this from kind of a macro basis, we're starting to see a shakeout in e-commerce.
Well, we are, and we're starting to see people who now can go back to the store and feel comfortable shopping. And so the online is not the only option they have.
Absolutely. That, you know, and that's causing basically a lot of companies got fat while they could be sloppy while we were all locked up, finding out that, oh, wait a minute, we got a business we got to run here.
That's right. And we got to do things to make it profitable.
Absolutely. Resetting the table, big update in response to the Powell press conference after the Federal Reserve yesterday, 45 minutes before we open this morning. I'm guessing we're going to see a little profit taking after that big bump up yesterday. How are we doing?
Yeah, we're going to take some money back off the table. We've got the Dow down a little over 0.5 point, the S&P 500 down 0.7, the NASDAQ 100 down 1%, and the Russell 2000 down a little over 0.8%. So all of the indexes are heading into the red right now. The commodity side is the exact opposite. We see silver up almost 4% this morning, back up over 23, finally, $23.27. Gold, a big jump for it, up 2% to $1,907 an ounce, finally back up over 19. And then crude oil is taking a big jump today as well, Dave, up 1.4% to 109.38 a barrel.
That's kind of continuing a trend that we saw starting yesterday. It was up to 104 yesterday from frittering around at 101. I didn't want to hear that. Overseas markets, the usual mixture. Asian rim markets mostly off except for the Chinese markets because they like it when the government decides they're going to do stimulus. So Chinese markets were up on the mainland. Markets in Europe generally up. They're happy about what they saw yesterday on our side of the fence, so they're all trading up over 1% midway through their day. Keeping tabs on one's retirement income and making sure you can count on it, something that ought to be on the forefront of anybody's mind if you're less than 15 years away from retirement. How do I find you to get that assurance, Phillip?
Dave, you know, it's one of the reasons that we developed our core retirement design to make sure that people could design the retirement they always dreamed of. Give us a call at 863-382-0037 to walk through our core retirement design process. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730 and 95.3 FM.
And back here again tomorrow about the same time on Light FM. Phillip, thank you so much. You have a good day and welcome back.
All right, buddy. I'll talk to you in the morning.
Thank you, my friend. It's 105.7 Light FM and Statler Financial Services. Phillip Statler.
Hey, folks, I want you to know I'm so glad that you joined us again today and that we're back in the saddle going at it again. Looking forward to our conversation again tomorrow with Dave. Hey, until then, have a great day. Bye now.